Hi, how are you this morning? What a gorgeous morning it is. Updates for agents. Today's call is going to be probably a little brief. There's just not a lot happening right now, but let's go ahead and look at the agenda I've got. We're just going to talk briefly about the Supreme Court decision. It came down, of course, last week, actually, and the Cadillac tax. And we're going to talk a little bit about SBCs. There's an update there with the summary of benefits and coverage. Talk a little bit about reporting requirements. Compliance continues, so we'll just do a couple reminders there as a follow-up to our conversation last month. And then just a couple other updates. So let's get going here. So as you have heard, the Supreme Court did side on the, I'll say the ACA, right? It's that the intention of the ACA was to cover all states regardless of the type of exchange they have. So Iowans get to keep their subsidies, and you know, whether or not we agree with that decision or not, I'll tell you this: I think it makes our lives a little easier, because I can't imagine what would have happened had our clients been told they don't get their subsidy anymore. And I'm imagining the phone calls you would have all gotten and we would have gotten. So anyway, so yeah, so we're going to keep marching down, and I think, you know, it also, you know, how many times has this been, different components of the law been contested in court, and it continues to be affirmed. So I don't know if politicians are getting the word on this, that, you know what, it's probably here to stay, so how can we fix it? And I don't know about you, but I get frustrated in the lack of activity going on in Congress to do anything to make this better. So since a bunch of us from Health Underwriters were in Washington in February, and we had talked about changing the definition of full-time from 30 to 40, or something other than 30. That's not going anywhere. How about pushing out the definition of small group? Instead of having it go to 100, you know, push that, delay that decision. Nothing's happening there. So the fact that the courts sided, you know, to be able to keep the subsidies in all the states, it's just kind of one more, I guess, kind of saying this thing is here. It's not gonna get turned away. It's not gonna get determined that, you know, that this needs to be blown up and have something else in its place. So how can we fix this and make it better? So as you guys know, we're going to keep marching forward, and luckily, I think, like I said, we're the ones that meet with the clients, and so they can rest assured that they'll get their subsidies, and we'll continue to move forward. One other Supreme Court decision happened at the same time. It was like a day later, and I know this is also can be a political hot potato, but when you talk about the Supreme Court's ruling on marriage equality, we need to now take that into our communities and figure out what this means for clients that might come to us. And so I want to make sure that you're aware of that. So I've literally copied into this presentation this morning really the verbiage around the Supreme Court decision overturning the state's ban on same-sex marriages. Now, as you know, in Iowa we didn't have it, but if you've got clients in other states, in Iowa, I meant to say this didn't impact us because we already had legalized marriage equality in Iowa, and we had the federal acknowledgement of that in Iowa. But this is now all across all 50 states, and so anyway, depending on, like I said, whether or not you've got clients in other states, or you know, a question could come up, especially if there's employees of a group that we might have that you guys might support that have these issues in another state outside of Iowa. Even if their state didn't allow for this, it now does. And so it'll be interesting to see if there's any other fallout from this, especially as it relates to some of them we had domestic partner benefits, and so now that there's marriage equality, then all have the right to get married. So did those go away? And as you know, with self-funded groups, I'm going to go down to the next slide here, that you'll notice here that the Kaiser Family Foundation survey last year found that while nearly all employers offered coverage to spouses, only half allowed same-sex partners to claim insurance benefits if they weren't legally married. So what we're seeing here is dropping, as I was just saying, the domestic partners, and now they can legally wed, so that would be the law of the land then, so to speak. but each group, especially when they're self-funded, they get to kind of put their own rules together. But this is just interesting. I want to make sure these were the two big Supreme Court decisions that came down. I'm thinking it was last week, right? And I'm getting my weeks mixed up. So it was, anyway, it was the last week in June. I think that was last week, or the week before, you know. Okay. So I want to touch base on the Cadillac tax because, and thank you, Dietrich brought this up to me and said, Lynn, you know, you really should be talking about it, because even though this doesn't go into effect until January 1 of 2018, there might be some union and labor negotiations going on right now and that might care about this. So I just want, if you guys are dealing with any of your employer groups that are that have a bargaining component to it, where there's a union there and they're bargaining and they're going to sign an agreement for so many years, make sure that you're communicating to your folks at the employer group. And I want to get to the next slide because I want to show you the numbers. So let's make sure that we know that the Cadillac tax would be imposed, right, if there's they calculate an excess benefit with result to coverage, and I'll show you what that is, and then know that the tax is 40% of the excess benefit. And then I'll show you on this next screen. In fact, let's go to that now. So they're talking about this excess benefit, and these numbers right now could be adjusted annually due to whether it's cost of living, consumer price index, however they index these. But right now they're saying in 2018, for any individual plan that exceeds the premium of $10,200, or a family plan that exceeds premium of $27,500. So what I did there is just did some quick math. If that individual premium exceeds $850 a month for a single and $22.92 a month for family, then those plans, that excess is going to be subject to a 40% tax. Now look at here to what it says to who would pay that tax. So it talks about here, if the employer-sponsored coverage consists of health coverage under a group health plan, the health insurance issuer is liable to pay the tax. So really, it's the health insurance issuer on a fully insured group would be the carrier, right? So generally what we're hearing from the carriers, though, if they're going to pay the tax, they're going to then tax the group. So it's who is accountable for the tax to pay to the government. Notice the next bullet. If the employer-sponsored coverage consists of employer contributions to an ARCH or MSA or a health savings account, the employer is liable to pay the tax. So here's what we're learning. Now, these aren't final guidance yet. This is what we know so far, and this could change. But if an employer is contributing to an HSA and that amount exceeds the $850 or the $22.92, again, that excess would be responsible. The employer then would be responsible to pay the taxes on that. And then, of course, if it's an employer-sponsored coverage like a self-funded plan, of course, the plan administrator is liable to pay the tax. So just know this, and I guess hopefully the premium tells the story. So if you're looking at a group plan and it's going to, the monthly amounts for single or family coverage are going to exceed these amounts, you want to now start to have those conversations with groups so that they know in 2.5 years they're going to have to pare these back. They cannot be offering this kind of coverage, and you'll notice some of the plans, like I think both Coventry and Wellmark, I'm thinking, pulled away their platinum plans on the individual market. I think they might have still offered it on group, right? So anyway, you're going to start to see. I know one of the carriers decided to pull away their platinum plans. They're so rich, and I think especially on the individual market. But so there might not be an issue there with with that, but even in a silver or gold plan shouldn't probably approach these premium amounts, but look at them anyway and just kind of know those numbers, the 10.2 and the 27.5. So when you're dealing with a group, to give them a heads up and kind of be watching for that. Let's see, and then it just talks a little bit more here about calculating the tax. So as I said earlier, it is the excess benefit, and so if your 10.2 is the number and your premium is actually at 11.2, so you've got $1,000, it'd be then 40% of the $1,000. So you're going to owe $400 in excise tax, and then who is it? Notice also here that it says if you're responsible for paying the tax, and it's like notify the Secretary of the Treasury and each coverage provider of the amount so determined for the provider at such time and in such manner as the Secretary may prescribe. It's like, okay, so whoever's responsible, right, for paying the tax, but notice how it says generally each employer must calculate it and then notify the Secretary of the Treasury. So just know that there will be more communication on this, but it looks like this is one more thing. If the group is going to dabble in these waters, if you will, and have these really, really rich plans, there's going to be more burden put on them to be able to report and say what they're doing, why they're doing it, calculate the benefit, or the tax rather, and get that payment sent in. So, yeah. Yeah, I'll leave it at that. You can see there's just that little bullet at the bottom. It's just know that the final guidance has not been communicated yet. This is some general information they're giving us based on what's in the law today. But wow, employers are strongly advised to analyze the individual provisions of the law in conjunction with knowledgeable tax counsel to determine specific compliance responsibilities. So once again, talking with their tax people, but I think they look to us as their broker to make sure that we communicate to them what their liability would be based on the type of plan they're going to be offering. So I think they just need to avoid it. So find those folks, and you know who they are, that are offering really rich benefits. When I ask people, you know, what's your deductible today? And when I hear them talk about a $500 deductible or something less than that, it's like, okay, do you realize how rich of a plan you have? Or you talk to employers that are still paying 100% of the premium. So anyway, keep an eye on that for your employer groups. And then this was kind of obscure, but it did talk about changing the summary of benefits and coverage. And generally, as you know, this isn't our burden. We need to make sure that they have these copies, but the carriers are going to have to be compliant as they generate the SBCs for us. So this is really on them. But I want you guys to be aware that it looks like, and they're saying here, on or after September 1st, a new SBC template and documents should be finalized with an effective date of on or after January 1 of 17. So this is really a carrier issue, but I wanted you guys to be aware, so we might get a different format of the SBCs, and we'll see that then, and we'll learn more about that, I'm sure, as we get into this fall and training. By the way, I don't have this on a slide, but I'm just seeing the September 1st date there. We've got dates scheduled now for classroom training, going out on the road again for Wellmark coverage for this fall, and we'll be sending out a hold the date very soon, but they're in September. They're like mid-September, like 14, 15, 18, 24, 25 of September will be our on-the-road trip, traveling around the state where we do Storm Lake, couple in Fort Dodge, Des Moines, and Cedar Rapids are the 5 locations that we'll be in mid-September. So just if you're planning on taking some vacation plans that week of the 14th, 15th, 18th of September, and or the week of I think the last 2 days of like the 24, 25 of September, just know that that's when we're going to be out on the road. There will be like 4 or 5 CECs, so if that's important and you need those will be offered as well. Another notice that came out that the law is going to increase the penalties regarding returns and statements filed. So here's what's interesting about this is that, you know, the employers are required to report, and we've been talking about that in our compliance section, but they're increasing the penalties. So for example, if somebody doesn't fill out a form correctly, they're literally going to get fined for not completing the information correctly that they sent in. So not only do they get fined if they don't offer coverage, and they're supposed to, that's under the employer shared responsibility provision, but now they're talking if they're just filing their returns or statements, if you will, and this is the 1095s that we've been talking about, the 1094s, all these kinds of forms that they need to report out. If they fill them out incorrectly, there's going to be penalties. So just know that. This is what I was just trying to communicate here. And of course, there's penalties if you don't furnish the correct statement, not only to the government, but to each of the employees. So just know that I don't know, the theme I'm getting here is they're looking for money. This is why we're seeing more auditors added that are going to be looking at whether or not people have the right documents on file. And so compliance, as I said, we'll talk a little bit more about compliance continues. But here's now the specific information of where, you know, maybe the penalty for failure to file, maybe $100, well, it's going to $250. And it's interesting. And then they notice that the fines can't exceed, and they had 1.5 million there, but they just increased them to 3 million. And that would be the maximum fine, right? It's like, holy cow. And then, you know, if you don't provide the right statement, this is the penalties are going up, and it's just, well, I'll just say it. This is where they're going to be generating revenues, because we know that things are going to happen. People are going to try to fill out these forms by themselves. I did a seminar yesterday, again, up in Spencer, and I'll tell you something. The people that came up to me afterward, and they're still looking to do this themselves. The employer group with their HR staff are looking to do these themselves. And all I can say is then I don't know about you, but I would find a partner, you know, and we use ADP and Paylocity, and I know there's other companies out there, whoever they have and they can use, find somebody that will carry that responsibility for them. This is only going to get more complicated, and for someone who wants to take this in and do this themselves, then, you know, good luck to them. But I would make sure that you've done what you need to do by saying, make sure that you consider an alternative company, that this is their area of expertise, and they would carry the liability burden for you, because there'll be financial penalties for not doing it right. So when I talk about compliance continues, this is just my reminder to follow up, if you haven't, with either we've got Advantage Administrators in base, or our 2 TPAs. If you've got your own, that's fine. But these are the 2 that we've vetted and we feel most comfortable with, that really understand our market. They understand what the client needs to do. And the things that are most pressing to me to make sure that you've followed up on the ERISA wrap document for any group. It doesn't matter their size, as long as they're not a church or not a government entity. Those 2 are exempt. But any size group, as long as it's not a church or a government type entity, they must have an ERISA wrap document, or they would be out of compliance based on the Department of Labor and the ERISA, the Employee Retirement Income Security Act of 1974. The POP plan, that's for your pre-tax deductions out of the paycheck for your employees. Make sure they've got one of those. And then not only that, but I'm still finding that people are not sure how many FTEs they have. So make sure, if you haven't seen our spreadsheet, that you give that to them. Email them a copy of the spreadsheet so they make sure they calculate their FTEs. We're going to find now that people maybe originally said, yep, here's where I'm at today. But there was just a guy yesterday in the seminar that said, Lynn, I'm just hovering right around 50. I might be 48, then I might be 52. And so what's going to happen? And I shared with them, as I'll share with you, and don't forget not only your own business, but sometimes we forget, if that same owner acquires another business, maybe a completely separate business, maybe they decide to buy the local restaurant in town, but that might be all it takes for that combined ownership then for those 2 businesses combined, then bumps them over 50 FTEs. So you need to continue to keep that calculator out there with your groups that are hovering perhaps right over that area of 50 FTEs. So remember and get comfortable with how to do the calculation. And it's quite simple, but the spreadsheet does it. So you take, all your full-time people, set them aside, take all your part-time hours in a month, and add those all up. No matter how many people it is, add up all those. Now remember, if there's seasonal workers, they don't need to calculate the seasonal workers. But take all the other part-time people, add up all their hours, divide by 120, and you'll get your FTE equivalent. Add those 2 together. Again, if it's 50 or more, then they are an applicable large employer. So that whole FTE calculation, make sure you're comfortable with that. You've got that on your laptop or something that you can use. And then when we talk about measurement periods, this is going to get a little confusing for some. And this is where both the FTE calculation, well, that's helpful, but I guess especially automating this measurement period. Because remember, when somebody has, and I'll go back to the example I think I used before with my sister is supposed to work 20 hours a week. So when might they be offering my sister benefits? Well, it's if she exceeds 30 hours a week on average. And then what's that measurement period that they're looking back at to determine who do we need to then offer coverage to in our next, in what we call our stability period? Who do I need to at our next open enrollment say, okay, you know, here we go, Julie, is my sister's name Julie, you get coverage now because we noticed over our measurement period you are averaging more than 30 hours a week. So here you go, here's your coverage. So it's not only that, but it is those full-time new hires to make sure that they're not missing their new hire waiting period, that they get offered it at the right time, and that all that's documented. So who's doing that for them? So, you know, we get caught up sometimes in the tax forms that need to be done at the end of each year, kind of W-2-like, if you will, and that's a burden in and of itself. But I'm also talking about keeping those employers compliant throughout the year to make sure they've offered coverage to the right people at the right time. So that's the whole measurement period thing. So automate that if possible, and that is part of, I know ADP for sure because I've seen their solution that they have that. So make sure that that's another component you're talking about with your employer groups about how they're going to stay compliant moving forward. It's fine that you've figured out, okay, this is how many I have today, and this is who I've offered coverage to today, but then what about on an ongoing basis? Okay, so just some other updates here, and please, 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 if you haven't certified yet, get certified if you want to continue to be appointed with Wellmark. And this crosses all markets. This is not unique to any particular market. It's whatever market you sell in, you need to get certified. And I finally just did mine a couple days ago this week and got it done. And for me, I didn't go through any of the pre-tests. I just went right to the test and took the test. And I do this enough, and I know this stuff enough. But you know what else I did? I opened 2 screens, right? And you have one open. Many of you have already done it, probably are on the call. But open one screen that has all the PowerPoint slides on it. Open another screen where you're taking the test. You're going to take the test. You're not sure. You just go back over to the other screen. So I think I got all my stuff done in probably about maybe 2 hours is what it took me. So don't forget that if you don't certify, or there's somebody in your agency that doesn't certify, they'll lose their appointment. No problem if you have multiple agents in an agency. You just roll that block under another agent inside your agency. But we'll be keeping an eye on all you agents who have not certified and making sure you get that way, or you want to find somebody to partner with. Assign your book over to and let them service your Wellmark business. If you don't certify and we don't move that block, your business will go to Wellmark. Okay. And then hopefully you guys saw the announcement that we're just really excited that we have a general agency contract with both UnitedHealth One and Medica. We're waiting on insurance division approval for their products, and then hopefully we can wrap in some of their training this fall. I think one of the carriers has said we'll go out on the road. Another one has said we'll probably do some webinars. So be watching for UnitedHealth One and Medica training. We are contracting now with folks, UnitedHealth One. If you already have an appointment with UnitedHealth One, you will not lose a thing by coming with KHI. You can move your appointment to KHI. Just get a hold of Nicole, and she'll help you get that moved. Since we're a general agency, you'll make exactly what you would make if you would have gone direct, and we get to provide you support. So we're excited about that. And then the same with Medica. Although they never sold products in Iowa, you probably don't have an appointment in Iowa already. We don't have contracting ready yet for Medica. They thought maybe around just shortly after the 4th of July they'd have their contracting ready, and we're still waiting. So we'll send out another email blast when we've got contracting ready. But no, we're really excited about that. And many of you have asked too about how we're progressing with Coventry and obtaining a general agency contract with Coventry. And I've shared with many of you that we're going to close out our books this year, and toward the end of the year, and they'll look at trend and what we've done. I feel confident. I can't tell you that we've got it yet. I feel very confident that's a very strong possibility that we're going to get a general agency contract, but we don't know that yet. So stay tuned, and Coventry, and we continue to have meetings and continue to look at our progress on our block of business, et cetera. And I just wish their small group products were more attractive in terms of their rates right now in trying to write some business. So I hope you're keeping an open mind, because they are looking at our overall block. And as you guys know, and this is how we feel here as an independent broker, we are here to represent all the carriers in the marketplace and find the best solution for our clients. So it does mean looking at all the options that we have. And so we are, just really build strong our relationships with United Healthcare, Medica, Aetna/Coventry, and Blue Cross. And we're not loyal to one over another. We are loyal to our clients, and we are loyal to you. And I know you're loyal to your clients. So it really does. Just here's the options that we have, and we're going to help that client make the right decision based on their needs. And so anyway, we're just tickled to have all these, and more to come on the Coventry thing. As soon as we hear it, we'll be letting you know that as well. But thank you for those of you that have stuck with us on your Coventry and worked with us and allowed us to support you, and all our carriers that we support you on. One other thing I want to comment on before we jump into questions, and that is the benchmark that David Lynn does. And we talked about it before, but I know not everybody is on every conference call. But we've got a conference call on Monday coming up, which we do. As you know, we've been doing a lot of webinars every Monday. And we hope that's a day that you tend to be in your office and you can dial in. And if not, all of these are on our website. So I want to remind you of that. You can go back to our website. I know it's hard to find that time to carve out to go and listen to a webinar. So if you can dial in, you're going to hear something great that I think is going to be value add for you. It's pretty much employer group focused. But Monday, David's going to share with us, what he's doing and how you can use his tool of the benchmark, and then the new online version to be able to add value to your clients. But also, we think you're going to probably generate more sales out of it, because once you show an employer how they compete or compare with others that are offering benefits either in their region, in their line size, in their industry, however you want to compare it, you'll be able to show them, whether it's the medical, the dental, the vision, even it goes into things, and I talked about this earlier, even around PTO and sick time, also 401ks. So you're going to really get a sense for and show that client where they might be deficit, right, where they might have a deficit rather, and be able to offer them a solution. So we think that we've got a great story to tell you about what we're going to do to support you in that value proposition and show your value to your employer group. So that's Monday, 11 o'clock. If you haven't registered yet for it, I encourage you to do that. If you need help, just call our office and we'll help you get the dial-in information for that on Monday. All right, let's look and see if we've got a question. It looks like we do. So we've got a question here that says, let's see, will we be discussing the FDRs that was in the blues yesterday? Let's see. I can pull that up and we can touch on that, Frank. Let me hold that for just a moment. Another question is here. So the Cadillac tax is based on the premium the carrier charges and not what the employer contributes. That's correct. It is really the premium that the carrier charges, but one of the other things is they're also going to add into that any HSA contributions the employer makes, or FSA contributions. So it's interesting, it's not just going to be the premium. So it is the premium plus. There could be these other components. Now again, it's not finalized yet, but this is so far what it looks like. You'd add FSA contributions that an employer makes, or HSA contributions. Now generally it's my understanding that the FSAs are employee-based, but anyway, we'll have more to come on that. But yeah, you're right, it is the premium, not what the employer contributes. And then thanks for that, Brenda. And then Randy says, once we get BCBS certified, do we have to let KHI know? No, we have it on a report that we get from Blue Cross to let us know who's certified and who's not. So I think we're good to go there, Randy, but thanks. I'm guessing you are certified. Congratulations. Let's see. And I'm not sure if, yeah, Brenda Eckert is on the call too. Brenda, if you have anything to chime in about the FDRs that was in the blue briefing yesterday. I didn't get a chance to review that yesterday for today's call. So if you have anything you can chime in, Brenda, I'll kind of wait on that. See if you have any other questions. I hope you guys are enjoying your summer. It's funny how I can't believe we're halfway through the summer, right, when we get past the 4th of July. And I hope you're having some good family time and travel plans and And okay, Brenda just said, sorry, haven't had time either. So tell you what, we'll take a look at that, Frank, and we'll interpret what they're talking about there and make sure we put something out to everyone if there needs to be further clarification, and it sounds like there does need to be. Let's see, any other questions? Comments, anything else? Not seeing any. Okay, I guess I can't think of anything else that I want to share with you guys this morning. So yeah, okay, so and people are starting to drop off the call, so I don't see any other questions. So listen, everybody have a great weekend, and we'll look forward to talking to you real soon. If a question comes up, just shoot a call to our office or an email or give me a holler as well. Okay, we'll talk to you guys soon. Thanks so much. Take care. Bye-bye.